Right, boys. So today we're talking about SMT, smart money technique, smart money tool, whatever you want to call it. Now, this is a technique, a concept that I honestly have got a few things to say about because I think that the majority of new traders use it wrong. So in this video, my aim is to talk to my younger self and teach everything about SMT that I currently know and break down the things that I would recommend that my younger self focus on when it comes to SMT, because I do think it is one of those concepts that as soon as you get introduced for it, you start looking for it everywhere and it starts messing up your trading, because I do believe it's one of the main causes of analysis paralysis. So let's break down exactly what an SMT is first, and then we will get into the when to use it and how to use it. So if any of you boys started out trading like I did and used an indicator where you are looking for a divergence in that indicator, I can't remember what I used, maybe the RSI, I don't remember. Anyone know indicators? Probably not if you're watching this video, but anyway, back in the day when I started trading, I would look for a divergence on some sort of indicator, and that would tell me how strong price was or how weak price was. Now, it's the same sort of thing you're looking for, except instead of looking for a divergence on an indicator, you're looking for a divergence between two correlating assets. So the most commonly used, obviously for the NASDAQ, is the S&P, because these two assets should move the same. Now, when they don't, it can tell us things. So as an example, if we were looking at NQ and ES, then we would look at NQ and see a low and a lower low, and then ES and see a low and a higher low. And these lows would be the exact same lows on the chart. So you can see what time the low was formed, and you can see that they don't correlate. Now, this type of SMT would be a bullish SMT, is hinting to you that a possible reversal is coming. And then if you flipped it upside down, this would be a bearish SMT, because NASDAQ has taken a high and ES has not taken a high. So this is what it looks like on a diagram. In reality, it looks something more like this. Now, can you see the SMT that is formed right at the low at midnight? If you can't, then I will highlight it for you. We have this low and this low, and then we have the same low, which obviously I can see with my chart. The time that that low formed, I can clearly see that this low on ES was lower on the right, and then this low on NASDAQ was higher on the right. So that is what it looks like on the actual chart. And then obviously you can see that is a bullish divergence, and then we got this move higher. Now, if you're wondering how to set this sort of thing up with the two indices side by side, you want to just go up here on TradingView, select a split chart, and then once you've done that, just set one up as ES and one up as NASDAQ. And if you're a MacBook user, you can hold Option on your keypad, and then you can just click between the two. So whichever one I click while I'm holding Option down will go full screen. So for example, I trade the NASDAQ more commonly, so if I want to focus on something on NASDAQ, I can just make that full screen. And then if I want to check for an SMT, I can just go bang, oh, okay, there is an SMT or there isn't an SMT. Now, one thing I want to tell my younger self is to not overthink SMT. SMT is one of those things that I want you to use as a added confluence. It should not be the start of an idea or something that warrants a trade entry. It's simply something you can add to essentially any reversal model, because typically it is something you'll use for a reversal, not really so much a continuation, although it can be used for continuations. I'm going to focus on reversals today, but it can be used with something like the 2022 model, which I do trade. I can look for when I have my market structure shift. I can look if the highs for a sell aren't correlated. And if they aren't, then that maybe could give me a bit more added confluence to the trade. But it by no means will make or break a trade. And that is the thing that I think a lot of traders mess up on, is that they require SMT for a trade entry. And if you are requiring SMT for a trade entry, then maybe think about not doing that, because, because that is not what it's designed to be used for. ICT has taught it. And if you didn't learn it from ICT and you learned it from someone like TGR, well, guess what? TGR learned it from ICT. So listen to the original guy who taught it if you want to know how to use it properly. But yeah, ICT teaches that it is kind of that cherry on top. It's that thing that you're looking for to give you that added confidence to an idea, to a trade, and by no means a entry trigger or something that should warrant you looking for a trade just because there is an SMT. Because believe it or not, these SMTs happen constantly. They happen all the time. If you just go looking for them, you'll see them everywhere. So you will end up talking yourself into a lot of trades that maybe if you were just focusing on pure market structure and other things like higher time frame analysis, daily bias, all those sort of things, you probably wouldn't take that trade. But because there's an SMT, you feel like you have to. Another thing I want to point out is don't use an SMT with the NASDAQ, S&P, and the Dow. I used to use the Dow as well, so I would have a separate chart where I would have NASDAQ, S&P, Dow, and I would look for an SMT between all of them. Now, while this is doable and it is something you can do if you wish, I would recommend you don't. I would recommend you just stick to NASDAQ and ES because they are the more significant SMTs. They're the SMTs that are more reliable. The Dow kind of just does its own thing sometimes, honestly. So looking for an SMT with the Dow, it's almost always going to be there. And yeah, ICT has taught that an SMT with the Dow isn't as good as an SMT with ES and NQ. So I would recommend sticking just to these two. If you feel like messing around with the Dow, then by all means go for it. I'm not going to stop you, but it's just a recommendation. Now, the final thing I want to go over is looking for SMTs during your trades. I have seen so many people in live streams that are just clowning on whoever is streaming because they're in a long, for example, and then all of a sudden there's an SMT at the highs, and then their entire chat box starts screaming at them to get out of the long trade simply because there's an SMT. Do not look for SMTs once you're in a trade. Once you're in a trade, you're in that trade until it hits your take profit, until it hits your stop loss, or until you manually exit if that is something you do. I personally don't manually exit my trades because I think if you allow yourself to manually exit, especially in the beginning, then you will talk yourself out of a lot of trades and simply just frustrate yourself, especially if you're looking for SMT during trades. Look, it's very likely that NQ and ES aren't going to hit the exact same take profit level that you might have at the exact same time. Just because one takes it doesn't mean the other one isn't going to take it. It just means that it might take it a couple extra minutes. Now, of course, there's going to be some people that say, well, no, because the last trade I took, ES didn't sweep the lows and NQ did, and then ES reversed. Well, that's one trade. I'm not talking about one specific trade here. I'm talking about a generic rule. I will not exit my trades just because there's an SMT, but if you want to, then by all means do it and then see for you if it works. But that is a very short video just going over everything you need to know about SMT and everything I wish I knew when I was starting off with ICT concepts and when I first came across the SMT. But that is all I have for you boys in this video. I hope you enjoyed it and you learned something. If you did, I would obviously appreciate a like and subscribe so I can get this channel to where I want it to be. And if you want to trade with me and my community of traders, then the Discord link will be in the description for free, as well as the prop firms that I recommend if you want to go give them a look. But that is all I have for today. I will leave it there. If you guys are trading today, tomorrow, this week at all, then I will wish you good luck, good trading. Catch you later, boys.